Welcome to the Dakota Live podcast. I'm your host, Robert Morier. The goal of this podcast is to help you better know the people behind investment decisions. We introduce you to chief investment officers, manager research professionals, investment consultants, and other important players in the industry who will help you sell in between the lines and better understand the investment sales ecosystem. If you're not familiar with Dakota and our Dakota Live content, please check out our website at dakota.com. Before we get started, I need to read a brief disclosure. This content is provided for informational purposes and should not be relied upon as recommendations or advice about investing in securities. All investments involve risk and may lose money. Dakota does not guarantee the accuracy of any of the information provided by the speaker who is not affiliated with Dakota. Not a solicitation, testimonial, or an endorsement by Dakota or its affiliates. Nothing herein is intended to indicate approval, support, or recommendation of the investment advisor or its supervised persons by Dakota. Today's episode is brought to you by Dakota Marketplace. Are you tired of constantly jumping between multiple databases and channels to find the right investment opportunities? Introducing Dakota Marketplace, the comprehensive institutional and intermediary database built by fundraisers for fundraisers. With Dakota Marketplace, you'll have access to all channels and asset classes in one place, saving you time and streamlining your fundraising process. Say goodbye to the frustration of searching through multiple databases and say hello to a seamless and efficient fundraising experience. Sign up now and see the difference Dakota Marketplace can make for you. Visit dakotamarketplace.com today. Well, I am thrilled to welcome back to our show Jen DeSisto, now the Chief Investment Officer with CW Advisors. CW Advisors is a $12 billion RIA headquartered in Boston, Massachusetts, but with offices around the country. But you are here in Philadelphia, Jen. Thank you and welcome to the studios.
Thank you.
It's really wonderful to have you. Well, we were just saying you were episode number 15 for us.
Oh,
and
that's great.
This is about 150. So, and I think Andrew O'Shea, my partner on the desk, and I were on that call.
We were.
About 2 years and change ago.
Excited to have Jen here in person this time.
We are as well. Thank you for being here. Well, before we get started, I'm going to read your biography for the audience. Jen recently joined CW Advisors as Chief Investment Officer, following over 8 years of success at Anchor Capital Advisors as their former Chief Investment Officer. Now with CW Advisors, Jen is responsible for building out the investment platform and communicating with advisors. Prior to joining Anchor, Jen was the head of manager research for the Fiduciary Trust Company. Jen also worked with Battery March as a portfolio manager for global equities. Previously, Jen worked with Fleet Bank Boston as a vice president in their global capital markets group and began her career at Citi in New York. Jen received her MBA from MIT Sloan School of Management and her BS in finance and economics from Carnegie Mellon. Jen is a CAIA and CFA charter holder and a board member of the CFA Society of Boston. Jen is also a member of the Board of Trustees with the Newton County Day School and Perkins School for the Blind, respectively. She is also an MIT Sandbox mentor and investment committee member at both the Dedham Country Day School and Economic Mobility Pathways. Jen, thank you again for being here. Congratulations on all your success. And congratulations on the new role. So you do have a new role. It's a very new role, less than a year now. So to tell us about the move and what you're doing with CW Advisors.
Yeah, I just joined CW last year. Excited about the opportunity. It kind of just came out of the blue, which was great. But it was exciting to hear about the growth. They're acquiring firms across the country. They were looking to build out their investment platform. And so it was just an exciting opportunity to kind of join a firm that was really interested in building for scale and thinking about, the future state of the business. And so I was excited to join.
There's so much growth and acquisition activity in the RIA market right now. How did you ultimately choose CW out of all of the RIAs that I suspect you may have had an opportunity with?
Yeah, I think one of the things was the CEO at the time, Paul Lonergan, really kind of convinced me of his vision for CW. And also, CW was in its early stages. When I joined the firm, it was about $8 billion in assets. We're now close to 14. We've made about 10 acquisitions in the last 6 months. So it's been, a very quick path to growth. But I think it was just his vision for, saying, hey, we haven't really set up a lot at the firm. We want you to come in and help build it. And that's, for me, I love building things. I've done that twice now. And so coming into an organization where I can really put my footprint on things and build out the team, build out the processes, build out the technology, and really think about different asset classes and investments for different client types was really fun for me.
And CW is backed by Audax Private Equity, is that correct?
Yes.
Great. And they are actively acquiring, as you mentioned, RIAs across the country. How does that structure impact your role as CIO?
Yeah, every firm that we acquire has their own investment philosophy, every investment process, and different, managers that they work with. So, it's been interesting because you kind of have to go into every single firm and really understand how they operate, and how they think about things. They're very used to talking about investments with their clients a certain way. And so we've spent a lot of time really trying to get to know these acquired firms and talk to them about, how they can kind of utilize the broader CW platform. We're really focused as being an integrator, and that's, easier said than done. But we have really tried to present a couple of different investment options for acquired firms. And our hope is over a few years that they will adopt kind of the stated investments that we've authorized for people to use. But it takes time. It takes people, time to get comfortable with the new process and the new investments. And so we eventually get there. We've seen it take about 1 to 3 years for acquired firms to kind of get on board.
Yeah, that makes sense. Just given, the nature of acquisitions in today's market, trying to understand the people, their processes, the portfolios that they may be managing in-house. Thank you for sharing all that. I'm curious, you must have done your due diligence. You're an experienced manager research person. So you've got everything in front of you. Ultimately, what was the competitive edge that you found with CW?
I think the people. I think between the people and having the backing from Audax, private equity, it's been great. A very established team of advisors, especially in Boston. But as we've acquired firms across the country, just a great group of people. They really kind of meet clients where they're at. So I really like that, it wasn't cookie cutter. It wasn't force people to do things a certain way. It was also interesting because I think we have a family office of about $2 billion of assets there. And then we have a lot of other clients who had no exposure to private investments. And so there was a real opportunity to kind of come in and really enhance what CW had already been doing and provide new options for clients and advisors. So from that perspective, it was kind of an exciting opportunity to really create more of a robust program.
That's great. We're going to dig into the private market exposure in a few minutes. But before we do, could you walk us through the current investment platform? So what does it look like today?
Yeah, just to give you some background on CW. So CW was part of Congress Asset Management back in the early 2000s. Paul Lonergan, the former CEO, he started it as a trust company within Congress Asset Management and realized the trust company was a little hard to run. So he switched it to an RIA format and around 2008, 2009. And then they spun out as an independent organization in around 2016. In 2021, they teamed up with CI Financial. CI took a minority position and was going to make CW the platform for acquiring. So they acquired a firm in Maryland called the Pinnacle Group that had about $2 billion of assets. They ran tactical ETF strategies. Shortly thereafter, CI decided to go in a different direction, and Paul teamed up with Audax Private Equity to buy out CI and make CW the platform for acquiring. So from that legacy, I have the group in Maryland that run the tactical ETF products. So for clients that are more passive oriented or just, want a lower touch type strategy, we have the team down in Maryland run those strategies. We have the Boston models, and at some point we'll have to rename those, but a lot of it's a legacy Congress Asset Management strategies. So Congress has been around 40 years. They've run growth equity strategies in the U.S. They run fixed income strategies. So for clients who wanted more active exposure and individual security exposure, we used Congress Asset Management and then built around with external managers for other asset classes. And then we also include the private investments out of the Boston office. where we, traditionally it's been more private credit and venture capital, and it's been a lot of friends and family money. But now we're really building out a program around the private investments piece. So our hope is to have more of a complete offering and active solution in Boston, but that's kind of a work in progress at this point.
What else is working in progress? So if you think about your to-do list, what are the top things that are going to be the priorities for this year?
Yeah, we've accomplished a lot in the last 6 months. It's been, I came into the firm just kind of running because there's just a lot to do. I think one of the pieces, an area of focus for me was private investments. And I've really been focused on the underlying structure and technology. So a lot of it was really manually done, decentralized, a lot of people involved. And so what we've tried to do is centralize the private investment process, the technology piece. And so we teamed up with Case to be that technology platform for us. So any open private investments we're trying to put on the Case platform, it just, we have better connectivity with all the systems. It's just easier for our operations team to manage that process. So that was step number one, just getting that centralized. We're not requiring all managers to be on the Case platform, but it definitely helps us just streamline that whole process. The second piece is the private investments piece. Like I said, we have a family office. They have their own distinct needs and wants, and then we have the rest of the client base. The family office has been primarily invested in private investments, but the rest of the office really had not been accessing private investments at all. And so we've really tried to expand the roster of managers that are open to accredited and qualified purchaser clients. I think that's really helped kind of expand adoption for advisors and clients because they really had never done it before. So this is sort of like, let's dip our toes in the water and try it out. So it's been a great from our clients to have other things to talk about that we didn't have before. The other thing we're working on is tax managed strategies. From the day I arrived, everybody was like, okay, we need some kind of solution. Clients are stuck after years of the markets going up, and people were not able to do very much with client portfolios. So we're really we've introduced a bunch of equity tax managed strategies. We're about to roll out some fixed income tax managed strategies. And so those have been the three that we're sort of been pushing hard on. And next is sort of developing a roster of managers in the public markets and giving people more options around value-oriented strategies, international, emerging markets, and then also expanding our private investment roster. We've just been trying to come up with some interesting ideas for the family office clients, but also offering more things to accredited and QP investors. So there's a lot on the list.
Yeah, it sounds like I should have scheduled more time.
But it's been great.
In working with groups like Case, I think there's some lack of understanding from folks on the asset manager side in terms of how that process works. Can you source a manager that's not on Case and then say, hey, our client base is on Case, can you go get on the Case platform? Or does it work in the reverse where Case has to approve managers and you can only use the managers that are approved on Case?
Yeah, I think we're sort of like a special case at Case. I think it's been, Case is all excited about us because we're sort of coming at it in multiple ways. So we have managers that we've worked with or will be working with and have approached them about going on to Case. Mm-hmm. And so we, through their solutions group, we're able to kind of upload all the documents and connectivity between the manager, the custodians, our internal systems. And that, the managers are thrilled because now they can potentially get onto the marketplace and get rated by Mercer. Mm-hmm. So it's been a great way to kind of bring people onto the platform that hadn't been there before. It always helps having kind of one of your allocators recommend a manager to get on because they'll kind of push it through faster. And then we also use products in the marketplace as well. I don't typically source through the marketplace, but if I have managers that are already on there, for our accredited investors, we were trying to really get people allocated into the private markets. And I've worked with Apollo over the years, and they have a bunch of stuff on the marketplace. So that was kind of an easy, hit to kind of get people allocated into the private markets at the accredited investor level by utilizing them.
That's great. Well, you have tons of experience underwriting managers. As you're thinking about the complementary aspects of adding external managers into the program at CW, what are some of the things you think you'll be looking for?
Yeah, I think, one of the things that has been interesting, I probably have met over 100 managers since I've arrived at CW. And so it's been interesting. I have a lot of people I've worked with over the years, but I've also met a ton of new firms. And I think one of the things that distinguishes firms in my mind is the firms that are just kind of pushing product versus coming in and saying, how does this fit within for your clients? And how does it fit in their portfolios? And also, how can I help solve a pain point for you? And so I think having more of a consultative conversation rather than here's my product lineup, what can you buy off of it? I think makes a huge difference. And so some of these new firms that have come in, they've been tremendous resources. And you want to build a partnership with them because they're not only just thinking about, okay, I got to push this product, but how can I help you as a firm, especially as you're growing, and what kind of resources can I provide to you?
To that point, there's always the investment due diligence and fit, but there's also the implementation aspect, which comes down to vehicle structure. So how do you think, in terms of your needs, how do you think about vehicle structure? Is it model delivery, mutual funds, separate accounts? What's best for CW?
Yeah, I think we're open to most different types of vehicles. I think, really trying to focus on the type of manager and how they fit into the portfolio and figuring out if they have the vehicle that fits. I think, we're steered away more from mutual funds, more towards ETFs or separately managed accounts for the most part. I think, we're kind of open-ended on that. I think that's the one thing that coming into this role and this type of environment is just having an open mind about these things. I would say on the private investment side, it's, the emergence of more evergreen type of vehicles has made, it's been a game changer in getting the accredited investors allocated because a lot of them have never done it before. They are scared of the liquidity or illiquidity that exists with drawdown vehicles. And so you kind of get this middle piece where they're like, okay, I can kind of have the semi-liquidity, get used to what the private markets offer. And so I'm thrilled to see that more firms are offering more of these type of vehicles because it just helps, build out a complete portfolio for clients.
Yeah, and it helps make it easier to do it in a programmatic way, which sometimes with closed-end funds, you see high net worth individuals make one big allocation and then stop, where the benefit of private markets is to be able to do it over time, right? So that's great to hear.
Jen, you're coming in a leadership position. So you're coming in, getting introduced to a team, the people in place to help you with these manager meetings, these decisions. What does the team look like in terms of the structure? So, how are you allocating responsibilities among all of these asset classes, both new and old?
Yeah, it's been interesting because a lot of the people have come through acquired firms. So there hasn't been, there was not a real investment team structure when I arrived. So part of it has just been getting to know all of the people at the acquired firms, understand their skill set, their interests, what they want to contribute to the investment process. So in Boston, we have an individual who came on board from another big firm, another allocator in Boston. He's been helping with the investment structure. He was pretty instrumental in setting up Case and getting all the connectivity and all the partnerships there. also hired another analyst in Boston to help with centralizing all the information, help with underwriting. But the next steps for me is need help with private investments. And that's a big area of focus for us. It's also the most time consuming. So and it requires a certain skill set too. I think people, I would love to have some people with more institutional backgrounds that, understand how private investments fit in a total portfolio, how to think about the risk of them. And have gone through that process of manager selection and due diligence. You see the widest range of returns in private markets, so you want somebody that has that knowledge and experience to kind of spearhead that.
What else do you look for in those recruits? So when you're recruiting a new analyst to the team, potentially they're going to have more private markets exposure, which is heavily influenced towards relationships, as you know very well. So, getting to know these firms over multiple years, multiple vintages. So what other attributes do you look for in people coming on board?
I think for me, it's just a level of curiosity and level of like the network that they have. That's a big piece of it. Like you said, having to build the network and really been able to kind of see across the spectrum of private investments. It's hard for somebody that's really junior to kind of walk into a due diligence meeting and really understand and have that perspective of how that manager operates or how they've performed over time in different markets. So somebody that's had that experience really is helpful for me. I'm also, I don't like to micromanage. So having people that are really kind of embrace it and don't need a ton of direction is super helpful for me, especially as I'm like spread very thin trying to manage all these different pieces at CW. So, I think people with experience are great. I also, the person I just hired is very junior, but he's super excited and loving to learn. So, I don't mind when somebody has that capacity to really embrace it and want to kind of jump in and do things to kind of help train and mentor them as well. So kind of finding that balance between the two.
Yeah, that makes a lot of sense. Thank you for sharing. So you've talked a lot about private markets since we've started. So I asked you earlier to kind of put together that to-do list. When you think about your private market exposure in sub-asset classes, where are the priorities? Are you kind of ranking them from private credit on down? What are you starting with? Or are you taking more of a broad stroke approach?
It's a little bit of a broad stroke approach. I think one of the things, we have a pretty sizable allocation to private credit right now. So building around that to other parts of the debt markets, looking at asset-backed finance, looking at real estate debt, other niches within the private credit space has been interesting. The other piece that we're looking for is, so like I said, people have a bigger allocation to venture capital. We don't have exposure to growth equity, to infrastructure, to real estate. So secondaries. So we're looking at a credit secondaries manager. So we're really kind of looking at a broad picture of private investments right now, and kind of filling in where we have holes, but also mindful, like we got to pace ourselves throughout the year. But it takes time to get to know these managers, and I really feel like you're going to be with them for a long period of time, so you really want to know how they operate, know the people, know how they invest, and so that takes time. You can't just, write a check tomorrow. So we take our time, and, so getting those conversations started now, maybe a year from now, you're like, okay, I'm ready to invest with you. So I have an infrastructure manager who I met a year ago at iConnections, and has this new fund coming through. And I was like, okay, we're ready. We've been talking to you for over a year. We kind of have an idea of how you guys manage and your performance track record and the people involved, and we're ready now. So This conversations take a while, but it's they pay off,
We should have you back in 18 months for sure.
Yeah.
It sounds like there's so much going on. How about on the public equity, public market side, I should say? I know there's a lot of public market managers out there who are raising their hands saying, we still exist. We're still here. It's not just private markets, particularly in prioritization, because to your point, it takes so much time, much more time potentially to underwrite one of those private market managers. On the public market side, what types of opportunities are you finding specifically around certain asset classes, sectors, sub-industries, anything that's particularly exciting?
Yeah, it's funny, after a 15-year bull run in growth equities, it might be time for value to play a role.
Be careful.
I know. Exactly. But I mean, we have no exposure to value in our portfolios. And so I would like to have options in the value space for our clients. And I think differentiated strategies would be interesting as well. I think people are looking for income, so things that are income oriented would be a great option. We have very little to nothing in international and emerging markets, and again, that might be an area that from here starts to perform really well. We've started to see green shoots at the beginning of this year, and that could potentially continue.
That's great. Yeah, we got to know each other many years ago on international equities, and there have been more headlines out that international equity, particularly European markets, are starting to see the light. So it'll be interesting to see if that comes to fruition from an allocation perspective with some of your peers.
Fixed income seems to be coming up a lot more in conversations with allocators. How have you all approached that space, and where might you have interest right now?
Yeah, I think the fixed income space over the last couple of years have been pretty interesting. I think we have, typically used a laddered approach, individual bonds, but we're definitely shifting more into securitized agency mortgages and other things where we think that there's better opportunities. I think we'll have to see what the Fed does this year, but we're sort of neutral on duration in our portfolios, which has worked out pretty well. And I think we're trying to kind of balance this public markets and private markets exposure in the fixed income space, and have a kind of a diversified approach there.
Mm-hmm. And Munis as well, I assume, would be incorporated for your taxable clients.
Yeah, we've definitely been using Munis as well. There's a lot of dispersion in the Muni space, so it's kind of interesting market there. We've been talking to a few firms. It's an area that I actually want to add more options is on the Muni space, because we historically have been kind of piecemealing it together. So want to have more of a dedicated manager there. And the tax managed in the fixed income space has also become a hot area as well.
And how about, we talked a little bit about public markets and talking about international equity. We haven't been talking too much about hedge funds just in general across most of our clients, or I should say most of our guests who have come on the last few months. But it's more opportunities are presenting themselves, particularly in long short managers, short books, given the market volatility that's been going on. So how do you see hedge funds fitting into the models that you're creating?
Yeah, I think hedge funds are interesting. We haven't historically done any, invested in any hedge funds at CW. It's an area that we're exploring. We've actually had a few manager meetings. When I was at iConnections this past January, I had a number of hedge fund meetings there. So it's an area we're exploring. We're trying to see where we want to add exposure there. We have client interest. The long short books, like you mentioned, especially in this volatile market, tend to have better performance. So it makes it a little more interesting for us to explore that. And I think, the hedge fund structure makes it, if people can have interesting differentiated ideas. I was kind of surprised the people I met at iConnections sort of had, bespoke fixed income hedge fund portfolios or, more macro driven portfolios. So I think it's an interesting way to kind of build out a portfolio. And we are for our family office, we've now added an absolute return bucket, which is new to us, which is about 10% of the portfolio. So, we're kind of balancing that between the equity exposure and fixed income exposure to put in a piece for the hedge funds. So now it's kind of exploring what we can add to that bucket.
Do you expect your clients would be interested in co-investments?
Yes, definitely. We have a number of clients that are interested in co-investments. We've done some co-investments historically. That has been something I've been asking our managers about and exploring a lot more. Our family office clients, they want interesting ideas. They want things to go, they want to go directly with these different investments. So the co-investment piece makes a ton of sense for them.
Well, you need to have the relationship in place before you enter into a co-invest.
Yes.
Most likely.
Yes.
Yeah, that makes sense. I appreciate that. You mentioned iConnections a couple of times. We have a lot of asset managers who listen and they attend those conferences as well. So maybe a little advice for them. They see you at the coffee table and let's say Andrew sees you from a distance and he's
15 minutes maybe?
15 minutes, exactly.
Yeah.
There's probably a queue of people already lined up to talk to you. But what's the best approach for an asset manager when you're at one of these events? iConnections is it's like going to Disney World in some ways. There's a lot of people there, but for good reason. There's a lot of good content. But I think it would be helpful for some of the asset managers listening. And in addition to what you're currently working on, which has been very insightful. Thank you.
Yeah, no, iConnections is great because it's kind of a one-stop shop for private investments. And, in a 2-day period of time, you can meet 20 to 30 different managers versus having every single person kind of come through your office. And so it's a real great way to maximize both their time and my time and figure out if they might be something that we want to spend more time on. So for me, it's been really helpful this year. They expanded it from just private investments to include the hedge funds. And so I got to see a wide mix of different types of investments. I think the biggest thing is how do you distinguish yourself and what's your niche and what role do you play in a portfolio? And so it was really interesting listening to people, how they pitch their product and how they distinguish themselves. I think the hardest area is probably private credit to distinguish yourself. Yeah. But there was a lot of interesting ideas. And so for me, it was super interesting and, enjoyed the conversations with people. And we have them on our list of people to explore as we go through the year. So
how do you distinguish yourself as a CIO?
I think, for me, it's, I've distinguished myself as a builder. And I think for me, building investment teams and building investment platforms has been a big part of my last couple of roles and definitely in my current role. And so I think that's a really great skill set to have, to come into a firm that, really needs to kind of think through the pieces of how to build something that's going to be scalable. And more institutional. I think, somebody told me that wealth management is where asset management was 20 years ago. And so there's a lot that needs to be done to institutionalize the wealth management space. And I think we're on our way and things are moving so fast, but there's a huge role for someone like me that came from an institutional background who thinks about portfolio construction, about risk. And also I've engaged a lot with clients over the years. So I'm not only just sitting there, behind a screen, building things and trying to figure things out. I've also, spent a lot of time with clients talking about the markets, but also different individual investments and how it makes sense for them and fits in with their what they're trying to accomplish in their life. So I think it's a good blend of skills that I've accumulated over the years. But it's, some people kind of fit in one category or the other. They're either the public market, public facing type of CIO, or they're just kind of behind the scenes doing all the number crunching and construction piece. And so I've kind of tried to blend the two.
Well, you're in front of the cameras now, so we appreciate that. You mentioned risk and risk management. We always talk about the opportunities that you're seeing, but when you think about areas that you're a little bit more skeptical of or just concerned about, maybe they're a little frothy or just areas that you'd rather be spending more time, what are some of the more risk areas that you're concerned about?
Yeah, it's been interesting. At year end, we kind of talked to people about large cap growth and scaling that back a bit. I think clients took that advice and rotated money into other parts of the market, which was super helpful. I mentioned private debt. I don't think there's any kind of glaring warning signs there, but there's just so many people in that space. And so for me as an allocator, really just distinguishing who is good and who is not. A lot of people have not been through a credit cycle. And so it's really hard to kind of piece through, who has that experience. And so I look at teams who have been doing it a long time, who have that experience through different market cycles. So I just, I worry as this cycle progresses, are we going to see some hiccups on the private credit side, especially with inexperienced teams? The area that's kind of underperformed the last couple of years, which has been private equity and venture. We haven't seen the distributions. We haven't seen the M&A activity and the IPO activity. So, I think everybody's hopeful that will start to pick up. But you wonder with all of the market volatility, are we going to have another year of sort of quiet, performance in the private equity and venture space? And whether that will make it difficult for people to raise capital there.
You spend a lot of time with independent schools. You're volunteering or sitting on boards. When you look at, I think it's 3 or 4 at this point, just looking at those schools, what types of trends are you seeing as it relates to those smaller institutional plans, the smaller endowments or foundations? I would assume they're maybe using outsourced CIOs. If not, where do you see the trends with that market going, particularly independent schools?
Yeah, the independent school endowments have been growing rapidly. And I think, definitely being in the market with the markets accelerating like they've had over the last couple of years, that's helped. I see a lot of them starting to dip their toes in private investments. Almost all of the endowments I've worked on have been pretty simple, like 70-30 type of allocations, very passive oriented. And now people are starting to think, okay, maybe we should be investing in other asset classes. Maybe we should be expanding, our opportunity set there. So it's been pretty interesting to see kind of the evolution of, the funds were pretty small a couple of years ago, have now kind of exploded just to the market gains. So rethinking kind of how you approach it going forward.
You've talked about your family office division a few times. Is there a typical profile of a client type on that side? Is there an account minimum, or what's the average family size on the family office side of the business?
Family office, so the minimum is $25 million. And it's usually multi-families, multi-generational families. And I think, one of the things that we've noticed is people they'll dip their toe. They're like, okay, who's CW? Should they be our family office, right? And so they'll dip their toes in and put, a couple million, and then all of a sudden we manage all of their wealth. And I think because we really try to provide a wide range of services, tackle, and take off all of these issues that people don't want to deal with. And it's ranged from, managing their entire private investment book and all the reporting around it. So people will bring their investments from outside. We have relationships with lenders. We've now started a relationship to lend against private investments. And so that's been great to unlock value for people. We're doing personal cybersecurity. So we offer a wide range of different types of services that, a lot of shops are not willing to go and do. And I think that's what attracts people to our family office.
Do you think there will be a program for emerging managers with CW? Is that something that you expect to define? If so, what do you see that looking like?
Yeah, it's early stages for the emerging managers, but I definitely think that's an area that we're going to be focusing more on. And actually, I'm going to be in New York in a couple of weeks at an emerging manager forum. So it's definitely an area that we're trying to build out and think more broadly about. Now that, we're kind of coming up for some breathing air, we can kind of think about expanding that and offering offering that to other people.
That makes sense. I appreciate that. Are you going to be able to take a vacation this summer?
I hope so.
Okay, good. Well, I hope so too. It sounds like you've been incredibly busy with a lot of success as well. There's a lot of advice that you've given us over the last 45 minutes or so, but maybe some parting advice for the students who listen in. Unfortunately, it's spring break at Drexel University. I was hoping Jen could come over to the classroom and share some of her wisdom. But for those who are required to listen in to this podcast, just some advice. A lot's changed in the markets within the last 6 to 12 months. We see it, at least in terms of jobs and students being able to get jobs. It's tightened up very quickly. So what type of advice would you give to someone who's graduating now?
Yeah, I think, one of the things that I love is students who reach out. And I've had a few students over the years who've done a great job of sort of like sending me updates on what they're doing, what they're working on in the classroom, what they are hoping to go do in the job market. And so they've built the relationship. So I'm like, okay, I have a friend over here who's looking for somebody junior. Would you be interested? And so I think, people who are thoughtful and polite and genuine about making that connection and looking for someone to help mentor them has been important to me. And I've really felt the benefits of helping the students kind of progress in their career. I think going to events, I recommend women's, join 100 Women in Finance, great networking there. College students, Girls Who Invest. Looking for programs where you can kind of network and build those relationships so you can kind of progress and find those opportunities out there. Because this is still a relationship market, and a lot of it's word of mouth. You're not going to see things posted out there, and so it's just kind of getting to know people in the industry and figuring out kind of what path. Do you want to be more client facing? Do you want to be behind a screen? And kind of distinguishing what your skill set is and where you want to position yourself in the finance industry, because it's very broad.
It is. That's true. It's good advice. Technology continues to flatten the world, but no matter how often I ask that question, everyone always says the same thing, which is network relationships, getting out, speaking to somebody, taking your earbuds out,
yep.
and being available for a conversation and following up. Thank you for that advice. We appreciate it. Thank you for being here. Congratulations on all your success. It's really a pleasure to have you here in Philadelphia at the Dakota studios.
Thank you. It's been my pleasure.
Andrew, it's always good to see you. Thanks for being here today.
No, fantastic discussion, and I have a feeling we'll be seeing CW continue to grow.
If you want to learn more about Jen and CW Advisors, please visit their website at www.cwadvisorsgroup.com. You can find this episode and past episodes on Spotify, Apple, or your favorite podcast platform. We are also available on YouTube if you prefer to watch while you listen. Finally, if you'd like to catch up on past episodes, check out our website at dakota.com. Jen, thank you again for being here. Andrew, as always, thank you for being here. And to our audience, thank you for investing your time with Dakota.
Don't say goodbye.